We've got more inflation news out today that shocks the market, or at least catches them off guard. But what's weird is how the market responded to this surprise. And I'll let the cat out of the bag, the surprise on the upside with the most recent inflation data. And I'm not talking about the CPI, we're talking about the PPI. More on that in just a moment. And then we've got big moves in the 10-year Treasury yield that I think is telling us a lot about what the bond market is expecting with inflation in 2025. And then we've got new Trump tariffs. He signed all these reciprocal tariffs into law today. So we'll see if we can go over to CNBC and get some details on exactly what is happening, try to think through the ramifications. All right, first and foremost, let's start with CNBC and the PPI, producer prices or producer price index, rose 0.4% month over month. Now, this was compared to the Dow Jones estimate for 0.3. So we had a surprise to the upside. So you could call this hot, just like the just like the CPI data yesterday. But what's interesting is the market said, okay, that's a surprise on the upside, but we actually think that this means we're going to have less inflation than we thought just yesterday. Gets a little weird here. Check this out. Key talking points. Producer price index increased by a seasonally adjusted 0.4, estimate 0.3. Like we said, stock market futures moved slightly higher following the release while Treasury yields fell. Kind of giving away the surprise there for the second topic, but a lot more details there. Wall Street strategists said the report suggests slightly more benign inflation picture, even though the PPI data surprised on the upside. The gauge of wholesale prices rose more than expected in January, though some details of the report indicated that pipeline inflation pressure is easing. Okay, so let's get into it here, guys. Give us the deets. Stock market, okay, got that. Wall Street strategists cited details of the report, okay, benign. In particular, the healthcare showed easing. Physician care fell 0.5%. Also, domestic airfares declined by 0.3%. Brokerage services were off 2.2%. So at surface level, it seems as though interest rates should go straight up, just like they did yesterday. But then it sounds like when you look beneath the hood, it's like short term, okay, this means more inflation, but maybe over the midterm, this is giving us an indication that maybe the CPI is peaking out here at 3%. Now, I know that understates inflation. I get it. We're just using that as a proxy. Why do we pay attention to it? Because we can see a trend, and also because it's what the market pays attention to. While the producer and consumer price index releases are wildly cited inflation gauges, they're not the principal ones Fed uses. Rather, the central bank focuses on personal consumption. So PCE, which the Commerce Department will release later in February. The PPI, and again, the Fed says that they go on the PCE, but do they really? Probably not. I mean, just because they say they focus on this doesn't necessarily mean they do. Putting data together, the core PCE measures likely will show a 0.22% increase, down from 0.45. Yeah, and that's what I like to put a little more weight on, is the month over month. It's not so much the year over year. I mean, the year over year have a lot of base effects and whatnot. I like to see the trend month over month. That's why, to me, the big number yesterday wasn't the fact that we've gone from 2.4% up to 3%, but it's more so that the market was expecting 0.3 month over month, and we got up to 0.5. And again, referring to the CPI. Here's a quote from Elizabeth Renter, senior economist at Nerd Wallet. Wholesale price growth came in slightly higher than expected in January, and the read for December was adjusted upward. Okay, in other words, inflation at the producer level remains high, and one concern is that this inflation could ultimately be passed on to the consumer. Revisions to the December numbers will also complicate the inflation picture. January producer prices for services increased 0.3, goods 0.6. Services were led by a 5.7% jump in traveler accommodations, which the BLS accounted for more than 1/3 of the gain. On the good side, and we're going to actually get into this in a moment, 10.4% surge in diesel fuel costs was a significant factor, but overall gas prices are going down, way down. In fact, the point where Chevron just laid off 15 to 20% of their workforce. So you try to project out 6 months, although it's impossible to predict with accuracy or with complete accuracy, and there are no certainties, there are only probabilities. But man, you got to look at Chevron just taking the hatchet to their workforce, along with a lot of other things, and say, boy, is the CPI number going to continue to go up and up and up and up? My base case would be no. I've said this for, I've said this. In fact, I get a lot of things wrong, obviously, on this channel. When you do thousands and thousands of videos and just right off the cuff, just give your opinion, you're not going to be right every time. But one thing that I absolutely pegged was inflation. I mean, I was talking about inflation going up in 2021. And then in 2022, I started talking about disinflation. And I'm saying not just talking about it in my videos. Actually, that was George Gammon's prediction. And then once the CPI got down to, 3% or so, I was like, you just probably be in a range, because you got to think about what caused the inflation to begin with. You can say it was massive money printing or whatever it was, stimmies, velocity. And then, of course, it was the government locking everyone in a cage and destroying global supply chains. So you have more aggregate demand with the people with a higher propensity to spend, therefore velocity up, obviously. And then you combine that with a whole hell of a lot less stuff. And what do you expect to have happen? You're going to have consumer price inflation. But then you look, when we hit 2022 and 2023, you say, okay, is that still in the system? Are we still on a trajectory up? And the answer was no. So everything that led to it was pretty much flushed through the system, and the prices went up to that new level. And then we just kind of started to trend slightly higher. And that's when you saw the disinflation, meaning that we didn't have deflation. A lot of people always, what are you talking about? Prices aren't going down. Damn it, George. Have you been to the grocery store lately? Yeah, I get it. I get it. I'm not saying this. When I talk about disinflation, or when anyone talks about disinflation, we're not saying that prices are going down. No, prices will never, ever, 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 ever go back down to the, maybe asset prices will, but consumer stuff, those, you'll never see 2019 prices again. But if prices are increasing by 5% now, let's say, and they were increasing by 15%, that's disinflation. The prices are going up at a slower pace, you see. So again, the base case, I don't, because when you look at what caused it, you project out to 2025, you say, are we going to have that again? Are we going to have a complete destruction of global supply chains? I don't know. Maybe the tariffs do that, but probably not. Then are we going to have massive amounts of stimmy checks go out, trillions and trillions of dollars to increase that velocity? Maybe, but the only way that we would likely have that is if we had a recession that in and of itself would be disinflationary. So I think we just stay in this range between, I don't know, low twos and 3.5, 3.6, something like that. And that's what I've said for the last, I mean, you guys know that watch my videos. I've been saying that for probably a year and a half. That's kind of my base case. We've got to get a big catalyst. Now, I think that the CPI number could go below 2, but we'd need a recession. We need a collapse. We need a black swan, something. And then I think it can obviously go above 3.5. But in order to do that, something would have to significantly change. Like, as an example, maybe these tariffs do completely break down global supply chains again. And therefore, you have a supply shock. Okay, well, that would do it. Or, I mean, I don't know what the hell Trump's thinking, but maybe he just signs an executive order giving everyone 10 grand or something. Okay, that'll do it. That'll take the inflation up for sure. But it's not just the fact that we had all this money printing, which is what most people think, right? We had all this money printing, and therefore we're just going to have another decade of inflation. No, because even when you look at the 5 years prior to the GFC, I think I talked about this on yesterday's video, you see that the money supply growth was very similar to the money supply growth that we've had since 2020. What we've had in aggregate now, that 1 year was definitely unprecedented. But when you look at the total of the 5 years, it's pretty much right on cue. And to give you exact numbers, I know them right off the top of my head because I used them in the whiteboard video this morning. From the 5 years prior to the GFC, we had 30% M2 money supply growth. And since 2020, we've had 38%. So 8% delta. I don't know that that really takes us into the next wave of hyperinflation or the 1970s. Fantastic news that you're not going to have to suffer through another round of 10, 15, 20% price increases annually, at least probably not in 2025. Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow rebel capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.